So after what was a crazy week in the stock market last week, so many stocks going bonkers, a lot of my stocks going bonkers, what a week it was in the portfolio. I think the portfolio alone returned something like 12% last week, which is just absolutely insane. You would take that for a normal whole year, but to have it in 1 week was just insanity in the stock market. So we're going to have a look, well, we'll have a quick recap of last week because it was nuts, and I hope you guys were making money last week as well. And as well as that, we'll do a preview into this week and what is happening going forward. Before we do, if you do want to start investing, make sure you join through the link in the description and join Trading 212. In my opinion, they are the best investing platform out there, and if you do join that link, you'll also get a free fractional share worth up to £100. But let's get started on to today's video. So last week, yeah, unbelievable. Hims and Hers alone last week was up 39%. 39.88, I'm going to call it 40. It was up 40% last week, and you know, when your largest position in your stock portfolio is up 40% in 1 week, it's probably going to be a good week for you in the stock market, and that's exactly what happened. It was a fantastic week. But then my second largest holding then had a cracking day on Friday. That was up massively, and in the last 5 days up 25% as well. So you can see why the portfolio was absolutely flying last week. And this is what is a great thing, is that all these kind of, you know, the DraftKings, the Hims and Hers, these were all seeds that were planted, you know, like 3 years ago in the 2022 stock market crash. Those were the stocks I was buying massively when the stocks just kept going down. Nobody wanted DraftKings at $20, $10, $8, and I was just buying every single day I could, and you get the rewards. And that's what, you know, long-term investing is that there's that times where people don't want these stocks. You know, nobody wanted these stocks 3 years ago, but you keep nibbling away, you plant the seeds, and then you just sit on your hands as a long-term investor, and then 3 years down the line, you know, we're getting the rewards. You know, DraftKings is nearly up 100% now. We've got Hims and Hers over 850% return now. That's investing, guys, and that's where we're at. And right now, there's the opportunities again. People go, oh, well, I missed the Hims and Hers. I missed the DraftKings. I sold my DraftKings. I sold my Hims and Hers. I'm missing out now. Yeah, maybe you got to learn from it. But the thing is that there's always opportunities. Somewhere in the market, there's another Hims and Hers right now. And if you buy that stock in 3 years' time, I'm sure you're going to get the rewards. Out there is another DraftKings. I'm sure if you buy it at the right time now, you're going to get the rewards in 3-4 years' time, as long as you're planting the seeds right now. So yeah, it's a great day to, you know, look at long-term investing really overall. Shout out that the market on the US market is shut today. Obviously, by the time you've seen this video, I hope you've realised it is shut. So the madness on the US market doesn't start until Tuesday this week. But the madness with Audio Boom still continues, up 14% today, which is just crazy. Obviously, I made a video last night talking about my number one UK growth stock. Audio Boom is on fire. What a day, what a week that one had as well last week. And then in Monday, it's just continued. The stock has gone ballistic. I said yesterday, I don't plan on selling any shares at the moment, and then it's gone up another 14% today. Maybe I'll need to rerun the numbers again, because I didn't expect a 14% jump in the next day. But yeah, it's an exciting time to be an Audio Boom shareholder at the moment. So congrats to any of you guys that are also buying Audio Boom or have been buying Audio Boom. Looking at the UK markets, not too much that I personally own on the UK markets that are reporting. I know some of you guys are interested in some of these stocks, like I think some of you bought Lloyd's when that was dipping not too long ago. Rio Tinto is sometimes a bit of a popular one. The one that I own that is reporting is Money Supermarket. I don't believe there's any other ones that I own this week that are reporting, but they've already reported today. The stock is up 6% on the earnings that they reported. I gotta say, I didn't actually think they were that good of an earnings, to be honest with you. I thought they would go down. Just shows you that you can't predict the market. You know, there's sometimes some reports that come out and I'm like, yeah, that's definitely going to go up, and then they go down. You know, Gaming Realms, for example, whenever that was, a week or 2 weeks ago, and then Money Group come out with their earnings, and then the stock is, I'm like, well, they might go down a little bit on this one, and then the stock goes up. It's crazy. I mean, maybe the reason why is just because it's had such a brutal last year that it is having a bit of a bounce. Just got to maybe too low a valuation. People going, you know what, I'm going to go in on this 6% dividend yield and this share buyback, and maybe that's why they like it, because this company is still very profitable and it's still growing profitability at good rates. That maybe people are saying, you know what, for the share buybacks and dividends, I'm going to buy it at these levels. But for me, I'd be concerned about the growth story. You know, the growth is starting to fall away from it a little bit. Some of the tailwinds that I thought we were going to get are not seeming to come. The insurance boom is kind of slowing down. We're not seeing the energy market come back as what we thought it would. We're not seeing interest rates and the money side of the platform come back as like what we thought it would. So overall, I was a bit like, there's nothing to really get you excited here, and the growth story is kind of fading away, but the market was not worried about that one. So what do I know, eh? So on the US side of it, same again, a little bit of a quiet week. I thought we were going to have a Celsius and Hims & Hers reporting this week. I think we're going to get them next week, I believe it is. The estimates at the moment for Hims & Hers is that they're actually going to come in with a very big beat, so we'll see if that does follow through. Looking at the rest of the week, not much on the Monday, obviously with the market being shut. Tuesday, I'm not really in particular looking at anything on this Tuesday, to be honest with you. Toll Brothers maybe. On the Wednesday, Etsy is an interesting one I like to look at. I did own that for a brief time, walked away with a brief profit because I saw the deterioration in the earnings coming, and I'm glad I did because they're struggling big time at the moment. Solar Edge, be interesting to look at. That's always a volatile one. Garmin reporting, I should have bought that a while ago. Fiverr, I used to own, walked away, got a bit concerned about the sales and marketing and the take rates there, but they've been doing okay. The forecast for them guys are pretty strong, so it'll be interesting to see if they do hit those numbers. Wednesday, Toast Cheesecake Factory reporting, nothing in particular. Thursday's really the mega day for me and the one that I'm most interested in. In the morning, we've got Alibaba reporting. Obviously, it had a fantastic year, up 46%, and this is why you can't predict the market, guys. You know, if I said that, you know, Trump is coming into power, everybody was like anti-Chinese stocks, including me. I was like, oh, this isn't good for Chinese stocks, and yet the stock is up 46% with Trump coming in, and it just shows you that you just can't predict the market. I mean, you'd argue the case that Alibaba, it was just at that low of a valuation for so long. It's about time it probably started rallying up. And yeah, I mean, you look at even right now, I think what's the valuation on Alibaba? It's something, yeah, it's 12 times forward earnings. And 25 is not a great one to use because they've got some, you know, one-off payments going off at the moment. But, you know, 12 times forward earnings for this business, it's still not too bad for like the king of China, really, is it? And, you know, you look at the numbers they're supposed to do, not too bad. 7% revenue growth, EPS moving up, hopefully a little bit. It's not too bad at all, really, is it? I mean, you'd probably want maybe a little bit more growth from Alibaba, and that's what analysts are forecasting next year. But if you can get this probably 12 times in, it's not too bad at all. So we'll keep an eye on that one and see if the momentum kind of carries on with Alibaba at the moment. I think a lot of it is on its potential of the AI space in China at the moment. So we'll see if that kind of continues going forward. Then we've got Walmart. That's a crazy valuation. Unity, that is one of the closest I've ever been to shorting a stock, so I don't like that one at all. Wayfair's reporting, and then on the close on Wednesday, we've got Mercado Libre. Obviously a stock that I've owned. Once again, you know, one of those that I was kind of buying during that 2022 stock market crash. I think my first ever buy is up 205%, but I've been averaging up during that time frame as well. And yeah, performed very well for us. But even in the last year, there's been big dips on Mercado Libre to be picking up some shares. I think last time that they reported earnings, the stock had a major drop. It was down 16% after it reported earnings. And I think I made a video for you guys. I can't remember if it was on YouTube or if it was on the Patreon, but I made a video going, this drop did not make sense. I bought during that time frame because I was like, they got hit because they're reinvesting into the business. If you're a long-term investor, you love that because that's going to show more in the financials in like a few years' time. So it's just the short-term money punishing them. Long-term investors should be buying this dip. And it didn't take as long. It was even quicker that when actually some of the long-term buyers came in, and actually up 18% from that point. And then it also had a drop during December. And I think I also bought during December as well, and I was like, this is just, you know, is it the fears from the earnings hanging over? Is it concerns around the Brazilian economy? I don't know, but these guys are positioned to still do, you know, that's what a short-term issue. Look at Mercado Libre and what will happen in the next 5 years. Next 5 years will outgrow any of these short-term problems, and since then it's also rallied up and it's 26%. So it's funny Mercado Libre because you do get those 20% dips out of nowhere from it, so you've always got to be prepared for it. But looking at the numbers look like good numbers for them to do. The issue you do have Mercado Libre is they never actually guide into their earnings, so you always see like mega moves on the numbers. So that's why the share price are normally quite volatile. So you'll see these numbers probably easily beaten or easily missed. So always prepare for that. But EPS wise, we're expecting a mega jump in. If they do anywhere close to these numbers, that'll be impressive. And if it's a beat, that'll be very good. And 39% year-over-year revenue growth, which is just absolutely insane amounts of growth. Next quarter looks pretty weak, 24% only expected EPS wise. Bit of a slowdown on the EPS side of it, and 2025 pretty slow growth forecast. I know there's concerns around the FX impacts and if that could slow them down a little bit more, but even this seems really cautious guidance from the analysts. Obviously, Mercado Libre don't guide, but I would expect them to probably beat these numbers. But what do I know? But yeah, they look like they could either have they could have a big hike up. And looking at the valuation, I always say like Mercado Libre normally trades somewhere between 6 to 84 times earnings. Currently 48 forward PE, so there's probably some upside as it expands their metrics up to 70 times earnings when those forward numbers do come in place. Like I said, you get this stock normally, it can have like a 10-20% dip out of nowhere. You get a 20% dip out of nowhere, puts it down to a forward times earnings of like 40, and then all of a sudden, boom, there's your opportunity to go buy it because, 40 times forward earnings, give it 12 months for those earnings to come through, and this trades back up at a 60, 70, 80 times earnings. You're making good money there. So yeah, that's always a plan with Mercado Libre if you see it in earnings or any random time and it has a drop. Block are reporting slowly coming out of its slump from its 2022 times. Had a big pullback during that time period, and depends whatever point you kind of want to measure it from, but it's been bouncing up a little bit since then slowly. I've got to say, I am quietly getting a lot more confident in Block. EPS wise, big improvement expected, and next year as well. If you look at revenue growth, 8% expected. Overall though, 11% growth. Next year, 11% revenue growth. And right now, it's not a bad valuation. It trades around about 18 times forward earnings. 18 times forward earnings for a fintech company growing at double-digit revenue growth. Good expansion on the EPS side of it. It's not bad valuation in my opinion. Especially because something like a PayPal, for example. I used to own PayPal. I did sell out of it because I had concerns that the financials were not moving in the right direction quick enough. So, when I look at PayPal, for example, the EPS is, it's slowly expected to move up in the right direction. But, I mean, if you look at PayPal, this next quarter, they're only expecting 1% growth. The quarter after, 3% growth. But for the full year, they're actually expecting to go from 4% or 4% revenue growth. So they're expecting a little bit of a speed up if they can get it. But in my opinion, 4% isn't great growth. And like I said, you look at something like a PayPal, it's currently trading about 19 times forward earnings, 15 times forward earnings. Block all of a sudden is 18 times forward earnings. And actually, because they're going to close off this quarter, that probably is going to drop again from 18 times forward earnings to probably like 16, 15 times forward earnings. So it's going to be very close to PayPal's forward PE. But yet with Block, you've got profit growing faster, and revenue growth is probably going to also grow double, triple of PayPal. So I'm looking at that thinking, Block looks actually a pretty good valuation. And a while ago, I was actually thinking, I don't want Square and PayPal in my portfolio, but I've always thought in my head that Block would be the one that I would sell out of, and then I would hold PayPal. But it shows you things can change quite quickly in the stock market, because PayPal then went on to deliver 2 bad quarters of financials, and I was like, and a third bad quarter of guidance, and I went, PayPal's losing it. And PayPal for me was one that I had to move out of, and then Block, as the quarters go on, is looking stronger and stronger. It shows you how quickly things can change really in the stock market. 2 quarters in, and then boom, all of a sudden you're looking at stocks a total different way, aren't you? So it's one I'm watching. If you give it, I'm hoping Block do good I've said this before, but if they do good earnings, the stock drops about 10%. That's the perfect scenario for Block. So we'll keep an eye on that one on Thursday. But yeah, Thursday is definitely the Super Bowl of earnings, with Block and Mercado Libre and Alibaba all reporting on that day. There's a few interesting ones as well. Bookings.com is always quite an interesting one. Dropbox is a little bit of an interesting one. So there's a few other interesting ones as well on that day. But yeah, that's what we got to look out for. So yeah, hope you had a good week last week, and let's see what this week's got in store for us. I would expect some sort of pullback profit taking, but still a busy one with some of the earnings anyway. So yeah, thanks for watching, guys, and I'll see you in a bit.